Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of PayPal, ticker symbol PYPL. And we are here because they have their earnings webcast in about 15 minutes, and I'll be streaming it, which you can see, just over there next to Ed. And yeah, I'll make that bigger if there's some visual stuff going on, but really just focusing in on the charts. And yeah, this is the second time I've streamed an earnings call. So hopefully, this is enjoyable. I do have a little notepad here. I might take some notes. But for the most part, during the webcast, I will be quiet. We can watch what is going on with the chart. And what we see with the chart right now is it looks like, there's some volatility, a spike and a dip. Let's see if we can see which happened first. Looking on the 1 minute time scale, we see that there's a run up to around 69.63, and then, in that same minute, got a pullback down to 59.87, right around there. Actually, the low for that candle was, 59.82, but we did go down as low as 59.01. Some things you might notice about this chart, I do have some lines up there. What are those lines? Why are they there? They're Fibonacci levels. And so recently on the channel, I've been using them a lot to kind of, identify when good, potential good buy and sell opportunities are. And yeah, so these are the levels that stood out to me. I did have this alert here for $62. I have been monitoring PayPal doing weekly videos on Saturdays, and I felt that 62 was kind of a key level to indicate whether it was showing strength or weakness. And yeah, and really was thinking that, $60 was a good buying opportunity, but I was not really too convinced because the price was teetering around support. And, these are basically the lines that I've gone over in either streams or during videos. Like I said, I put out on Saturdays. And yeah, so basically what you see here in the chart, I'm just going to adjust the axis here, is, I've noticed this yellow downtrending level, hoping that would serve as support. And then bigger picture, we see what looks like this falling wedge highlighted by the orange. And it does look like price has been trading above both of those levels, but it has been between a little bit. And so that's kind of why I was on the fence about PayPal. And, from these Fibonacci levels that we have hit during the after hours, let's see, I don't have them on the, when I take screenshots for thumbnails, I like to remove these because they get kind of cluttered. Yeah, so what we see is the 382 retracement from the low here before their last earnings and the recent high of $82.21, 21 cents. The 382 is $61.35, which price is just above a little bit right now in the after hours. And then also below that, the 50% retracement is $59.23. And so if we do look over at the 10-minute time frame, I'll just do that. We do see that the 382 level was hit, as well as, it's above Ed's head. And the 50% retracement as well was hit. I'm not sure because that was just within a minute. I don't know that order would have been filled. And so I have been standing on the sidelines with PayPal because I was, indecisive. But I think partly because of doing this stream and then also just kind of, being intrigued by it, having covered it for the past month or so. I did have a buy order set at 61.35. I didn't think it'd get filled, or if it did get filled, I thought it'd get filled on the way down. And, I should have been more disciplined and waited for that 50% retracement because then I'd have a much lower average. But, I'm happy. My positions usually start small and I add to them. And so I added one share. So not too exciting. But, with all the stocks that I cover, some of them, I started covering because I have positions in them. Others I started covering because there was interest. And then from that interest, I realized, well, I'm interested in it. And so I think this is the beginning of my journey of being interested in PayPal. And yeah, so hopefully, we see a rally up to, back to 68.21 and higher. But if not, if we do see a pullback, earnings are always volatile, or not always, but oftentimes. And so I'm prepared for if it does pull back a lot. I don't have a large position, so I can add, wait it out, see what happens, see how it settles. But hopefully we see it going up. And what I've seen on Twitter was what's going on was $8 in the up $8 in the beginning. Yeah, so let's see. I will get back to the daily chart in just a second. Just I wanted to point out something somebody showed me on, or something I saw on Twitter. Yeah, so it closed, let's see, at a price of 23.24, and then went up more. Let's see, 23. That's about $6, a little over $6, and then has pulled back. And so really, I mean, you could, based on these fib levels, you could have been swinging this. You could have swung this within a minute. Actually, I don't think you could have, because I think it went down. That's why it's a red candle. But it's 15% swing between those levels. Excuse me. But yeah, so I'm very curious to see what happens with this. I have been covering. I was saying that I have been covering PayPal on Saturdays, and I was reluctant to establish a position, but I just had an order filled at $61.35. Small order, typical for me to start pretty small, which is oftentimes one share, especially when it's over $20 a share. I'm not a big player, at least not yet. So I gotta manage my risk and manage my dollar cost average strategy and stuff like that. But yeah, one thing that was pointed out to me on Twitter is that this does kind of look like an potential inverted head and shoulders pattern, or inverse, I should say, where you have the left shoulder here, head here. It's possible I covered this in a video, I forget. And then potentially the right shoulder here, kind of ugly. But, maybe there's something there. Also, I mean, my concern with it really is that it didn't, like, I was hoping it would pull back before the close to right around, the top of not only this fib level, the 382 at $61.35, but also this yellow downtrend and the top of the wedge. I was hoping it'd pull back down to, the confluence of these two levels, and then that would tell me that, it's at a bottom and then there's strength. And so what we see now is, we'll see what happens. And it doesn't look like a double top or anything like that. So, does look like, it corresponds with the bottom over here. So if I throw up the volume profile, it does look like, let's see, that's actually, I think I'd have to go back a little more. Yeah, it's kind of in this area of this shelf here, I think largely because of this consolidation. But yeah, we'll have to see how things go. I've got about 7 minutes before the earnings call starts. I do have that window open. I have not used this platform that they have for the streaming of the call. So hopefully it goes smoothly, but we'll have to see. And one thing that I'm going to do before we start this, I'm just going to put out a little announcement on Twitter. And I might actually have to do that from the computer, because I don't know if I can get the link for this on my phone. Or actually, I think I can. There's the YouTube Studio app that you use to manage videos and stuff, and then there's the YouTube app, of course. And so I'm just going to share this from my phone so I don't have to throw up some clutter on the, and I'm actually going to put this on the 5-minute. Let's see what's going on there. You can see that, cool. Yeah, it kind of sucks with this big wick up there with the auto access. It, shrinks it, pulls it down a little bit. But yeah, I'm just going to post this on Twitter. Hopefully get some more people in here. Oh, I guess I didn't paste it. Or I didn't copy it. I don't know what happened. There we go. yeah, so hopefully we get some more people joining, some new people to the channel. And let's see. And I am going to probably switch my headphones over to the computer so I can hear the stream, the webcast. And so I'm just going to switch over to Chrome and see. Let's see. All right. Cool. So we got this going on. It does look like it will be visual, so that's nice. The Palantir presentation a couple days ago, like the first half of it was just stagnant, no slides or anything. And so this should hopefully be a little bit nicer. But yeah, let's see. And I don't have any volume from it yet. But when I rewatched some of the Palantir earnings call, the volume was a little bit lower than my volume. So I'm just going to turn it up a little bit. And so hopefully you'll have to let me know how it sounds relative to my voice. But for the most part, I probably won't be talking much. We'll just be listening together, trying to take some notes, and then we can discuss, go over the chart and stuff after. And yeah, speaking of the chart, what's going on with this? And once it does start, I'll probably make that their slides bigger so we can see that better, but also, be watching the chart, how it responds to what they're talking about. But yeah, it looks like, big indecision right here, and then just flattening out, waiting to see, what comes about with it. And, personally, I'm happy that it's above 61.35, that fib level. Yep, because I had an order filled just before, basically at this minute at 4:20. No, actually you can't see it, but that candle is the 5-minute ending at 4:20 candle. Yeah, you can't see it because the PayPal window is in the way, their stream, their webcast. But yeah, just hanging out here. And then after the stream, we can, analyze the chart a little bit more, but then I'll do a follow-up video on Saturday. I normally do that, and I will, while I have your guys' attention, I will point out that I do have this calendar that I've been putting together that, just going over different tickers each day, and if they get more than 100 views, I do them the following week. PayPal has been, one that I do every Saturday. It's a pretty popular one. But then I try to mix it in. I take requests during live streams. Those are the ones that are blue. Try to make them into clips, put videos out on them. And yes, there's a lot of really cool content, a lot of stuff on EVs. Yeah, I've been doing that. And, before this does start with a couple minutes to go, I will say, if you do like the content that I'm putting out on the channel, make sure you like it, whether it's live streams or, the videos, and make sure you comment, engage with me, whether that's in the live chat or in the comments. Love to get your guys' feedback, whether it's positive or negative. I'm learning as I'm doing this, so it's great to get your feedback. And, of course, subscribe to the channel. This week's been kind of a busy one for me, experimenting with earnings calls. And then I've been working the night shift at work, so I try to, it actually gives me more time to produce stuff, but I just end up being more tired. So yeah, next week will be more normal as far as the amount of content coming out, but I'll try to do another earnings call next week because this is, the Palantir one was pretty successful. It was fun, and hopefully, this PayPal one is as well. But yeah, just got about a minute left before it starts going on. I'm just going to check my phone to see if anybody's responding to the post I just put out, kind of advertising this stream. 162 people have seen it. Nobody's liked it. Oh, well. But yeah, hopefully we start to see some green candles here. And yeah, it'll be interesting too to see how it respects the Fibonacci levels, because I think that those are, I've been pretty impressed with those, especially with, identifying levels to trim at, to add at, stuff like that. Uh-oh. Got a little bit of red. Yeah, let's see. This is still. Yeah. Oh, and this is cool. I can flip through this. Yes, let's see. I might actually. Oh, crap.
This conference call is also being webcast. Both the presentation and call are available on our investor relations website.
Let me know if that needs to be louder or quieter, and I will try to be quiet so we can just listen.
Non-GAAP measures. You can find the reconciliation of these non-GAAP measures to the most directly comparable GAAP measures in the presentation accompanying this conference call. Our remarks today will include forward-looking statements that are based on our current expectations, forecasts, and assumptions, and involve risks and uncertainties. Our actual results may differ materially from these statements. You can find more information about risks, uncertainties, and other factors that could affect our results in our most recent annual report on Form 10-K and quarterly report on Form 10-Q filed with the SEC and available on our investor relations website. All information in this presentation is as of today's date. We expressly disclaim any obligation to update this information. And with that, let me turn the call over to Alex.
Thank you, Ryan, and thank you to everyone for joining us this afternoon. It's been a productive first 4 months. I'm pleased with what we've been able to accomplish in such a short period of time while delivering the solid financial results we will discuss today. More importantly, I'm excited about the foundation we're setting and the velocity at which we're executing as we enter 2024. Today, I'd like to walk you through the changes we've made to the structure of our company, including several key additions to our leadership team, give a clear roadmap for how we will be executing going forward, and share our strategic priorities for 2024. Jamie will take you through the fourth quarter and full year results in greater detail, but the headline is that we delivered a solid quarter during the most important shopping season for our customers. In Q4, we delivered 9% revenue growth on $410 billion in total payment volume. Transaction margin dollar performance was better than expected in the fourth quarter, and we continued strong expense discipline, reducing non-transaction related expenses by 9% year over year. Taken together with $600 million in share repurchases in the quarter, our non-GAAP earnings per share increased 19% year over year. While these are solid results, we know there is still much room for improvement, and we're committed to making the necessary changes to our business and how we invest and operate to get it right. One of the key changes I talked about in our last earnings call was ensuring we have an outstanding leadership team in place. It's important to me that we have a leadership team with a broad diversity of experience, deep operational rigor, and leaders with track records of success. I'm thrilled with the talent that we've assembled in the last few months. With Jamie as our new CFO, Isabel Cruz leading People and Places, Michelle Gill leading Small Business and Financial Services, Susan Carreri leading Global Markets, Diego Scotti leading Consumer and Global Marketing and Communications, combined with talented leaders who have risen within PayPal, we have a world-class leadership team in place to help the organization reach its full potential. Each of these leaders chose to join PayPal because they see the tremendous opportunity we have in front of us to reshape commerce.
Turn it up a little bit. Hopefully it's better.
Already driving a renewed energy within the company. Second, we've organized our teams around the customers we serve, consumers, small businesses, and enterprises.
And I can still make it louder.
Clear lines of accountability and will enable teams to focus on delivering the right solutions that address our customers' greatest needs. Regardless of the customer we're serving, we want to make the PayPal offering so user-friendly, so rewarding, and so integrated into a customer's life that PayPal is the obvious choice. Our new structure enables that. Third, last week we announced that we will reduce our global workforce by approximately 9% through both direct reductions and the elimination of open roles over the course of the year. As I mentioned in our last earnings call, our size has been slowing us down. While this was not an easy decision to make, this change is necessary to execute with the focus and speed required to drive our next chapter of growth and allow us to invest in our future. With these changes, we continue to reprioritize and invest in the innovation and delivery of products and solutions that offer the greatest impact for our customers. The team has been very focused on building out our strategy and driving focused execution for 2024. These are the most important priorities we're focused on this year. Accelerating growth in our branded checkout business. Improving overall profitability, including that of our high-growth PSP services. Unlocking the power of data to create more value for our customers while tapping into new sources of revenue and margin, and operating more efficiently. Our first look customer announcement 2 weeks ago was an initial demonstration of the importance of delivering compelling value propositions to consumers and merchants. As promised, we're doing a lot of things to drive change internally and externally. However, nothing happens overnight. It will take time for some of our initiatives to scale and move the needle, but the initial customer reaction and merchant demand for our new innovations has been encouraging. 2024 is going to be a transition year focused on execution to position the business for long-term success. Our clear goal is to reshape the company to accelerate profitable growth and margin expansion in the years ahead. Prioritization will be key, allowing us to move more quickly and with better results. Later in the call, Jamie will take you through our full year guidance. We have made strategic decisions to reinvest cost savings back into our most important initiatives. It is critical that we remain on offense and position ourselves to not only innovate, but capture our share of the growth in global commerce. We want to be clear-eyed in terms of the potential near-term benefits from our initiatives, which is why our 2024 guidance includes minimal contribution from the innovations we recently announced. We want to see execution and clear results prior to embedding these initiatives into our financial outlook. As a company, we will build back a track record of delivering on our commitments. In November, I committed to being transparent with you all on how we will run the business. I want to spend a few minutes to share our operating principles and how we expect these will drive value creation over time. Our 5 operating principles are: number 1, start with the customer. I believe in working customer back. We will start by defining our customers and their most critical needs. Then we will use that knowledge to inform everything we do, including investments and innovation. Number 2, focus on profitable growth. We will prioritize high-quality, profitable growth and driving improved transaction margin dollars through more rigor and discipline. Number 3, drive operating leverage over time. We will combine our assets and data to develop more personalized experiences for our customers and drive efficiencies across the business to leverage our cost base. Number 4, set measurable goals and communicate consistently. We say what we mean and mean what we say. We will be transparent and accountable for our performance. And number 5, maintain a strong balance sheet. We will be diligent in managing our resources and returning excess cash to our shareholders. These 5 principles will guide how we make decisions and will ultimately keep us accountable to deliver what we say we will do. Let me now take you through what this means for how we serve our customers and what we're focused on in 2024. For enterprises, we're focused on accelerating growth in branded checkout and driving the profitable growth of our PSP services this year. Branded checkout is a critical part of PayPal's value proposition. we need to ensure we have our best checkout experience available to every consumer on every merchant every time. This will be a multi-year effort. To start, we redesigned our branded checkout experience, creating more simplicity and consistency with the goal of optimizing presentment, increasing speed, and minimizing friction across all major checkout flows. When combined with our efforts in passwordless authentication, these new flows can result in up to an additional 50% drop in latency, allowing a shopper to check out twice as fast. Improvements like this are aimed at driving a higher selection rate of PayPal and better conversion for our merchants. A challenge in the past has been bringing existing merchants onto our latest integrations and experiences. This is one of the reasons why our new guest checkout experience, Fastlane by PayPal, is so exciting. It's truly differentiated and will provide a compelling reason for merchants to upgrade. With it, we can recognize up to 70% of guests visiting a merchant, reduce checkout time by up to 40%, and grow the top of our branded checkout funnel. BigCommerce, one of our longtime partners, has already implemented Fastlane on their platform, and the conversion of their merchants using this new solution is as high as 79%. Combining solutions like Fastlane with a full suite of PSP offerings and more targeted, personalized commerce experiences creates a powerful end-to-end suite of capabilities that drives higher sales for merchants and gives them more reason to choose PayPal. We're focused on driving profitable growth, including within our PSP services like Braintree. The team continues to earn market share and merchant confidence through product and performance enhancements, delivering off-rate improvements of up to 240 basis points for enterprise customers in the US. We're continuing to build out and seamlessly integrate additional value-added services in areas like orchestration, routing optimization, payouts, and risk as a service, in addition to serving as a seamless integration point for our latest branded checkout experiences, including PayPal, Venmo, and Buy Now, Pay Later. We will be able to compete in the market with a best-in-class offering and price to value. In addition, we're putting greater discipline into our go-to-market and renewal processes as we focus on profitable growth. These areas take time to scale, but we're laser focused on them and expect to make steady progress this year. For small businesses, we're on a journey to move from a variety of standalone products to a modern platform with a comprehensive suite of solutions. What this means in 2024 is that we're focused on accelerating the adoption of PayPal Complete Payments, or PPCP, through a reinvigorated go-to-market approach for partners and developers. This full-stack solution enables us to distribute our best branded checkout flow to SMBs while also competing for the approximately $750 billion addressable market of processing volumes. We've had limited penetration of SMB full-stack processing to date due to the lack of a strong product, but that is now changing. November and December were record-setting months for new SMB adoption of PPCP. We're seeing lower churn rates for merchants on PPCP year over year, but we've also seen increases in transaction volume for merchants migrating to full-stack processing from our legacy products. As the year progresses, we intend to drive additional adoption through partner channels, targeted marketing, and developer-friendly capabilities like low and no-code integration paths available through our brand new developer portal. Over time, we want to better serve other important SMB needs, offering more ways to help them connect to new customers. It's also worth noting that all the checkout improvements I just discussed as part of our enterprise strategy can also benefit the tens of millions of SMBs that use PayPal. For consumers, we're focused on differentiating our value proposition, deepening existing relationships, and giving shoppers more reasons to choose PayPal. PayPal already has strong consumer awareness and trust, but that is not enough to compete in today's world. Part of a person's decision to choose PayPal comes down to presentment, ease of use, and speed, areas where we still have room to improve. We also want to give consumers more reasons to choose PayPal by delivering personalized and rewarding shopping experiences that also drive higher conversion for merchants. This year, we're launching and evolving a new PayPal app to create habituation. We will also leverage our merchant relationships and the power of AI to make the entire shopping experience personalized for consumers while giving them control over their data. In addition, we will drive increased understanding and awareness of why PayPal via sustained marketing efforts. Our goal is to drive quality customer growth over time, as well as deeper relationships that include more frequent use and a greater range of product adoption. The new checkout and app experiences we are rolling out this year will also create an engagement loop that will drive higher awareness of the various products we offer and drive higher adoption of our portfolio over time. Let me give you two examples of where we have significant opportunity to drive increased adoption. In the US, we have over 27 million active accounts using PayPal Rewards. In the fourth quarter, Rewards accounts had higher engagement and average revenue per account that was almost double that of non-Rewards accounts. The average revenue per account of someone who adopts the PayPal Cashback MasterCard is about 5 times higher than the average checkout-only account. Today, only about 2% of active accounts have that card in their wallet. Increasing adoption of these products will not only drive a richer experience for our customers, but improvement in customer engagement and lifetime value for us. Redesigning our app and creating improved, frictionless onboarding paths are tangible ways that we plan to drive higher penetration of these types of products. We're also bringing more functionality and better experiences to Venmo this year, like the ability to connect consumers with cashback offers from small businesses in their local communities. In addition to this innovation, we're focused on driving adoption of the Venmo debit card. Venmo debit card holders are among our most engaged accounts and drive 6 times the incremental revenue than that of a P2P only customer. About 6% of our active Venmo customers have a Venmo debit card today, so there is significant opportunity there for us to focus on. Finally, this year we will demonstrate meaningful progress towards operating more efficiently. We've already consolidated many disparate technology services into common platforms, though we have more work to unleash the power of our data in service of our customers. We're simplifying and automating manual processes and investing in tools and services needed to drive productivity and innovation velocity. This will reduce cost and complexity, improve the developer experience, and give more reasons for customers to choose PayPal. For example, we're converging to a single merchant reporting system so that our merchants will get consistent and accurate reports, which will make a huge difference in how they run their business. Another outcome of consolidating platforms is that we will now see one view of the customer, which allows us to more effectively cross-sell the various products we offer. We will be moving at lightning speed and with the weight of the company behind each of these initiatives to deliver the best experiences possible for our customers this year. To wrap up, I am pleased with our fourth quarter results and the execution that the team delivered throughout the quarter amid an enormous amount of change. I'm excited about the year ahead and all the innovation we have in store for our customers. With that, I'll hand the call over to Jamie to take you through our results for the fourth quarter and full year.
Thanks, Alex. Good afternoon. First, let me say that I'm very excited to have joined PayPal. Our new leadership team is laser focused on our customers, and I am incredibly energized to see our team come together to deliver PayPal's full potential. Before I discuss our financial results, you'll notice several things different in our materials today. First, we've redesigned our press release in a more standardized, tabular format designed to allow ease of use and better consumption of information. We have also included additional supplemental metrics in our investor presentation, intended to provide greater transparency into our business. We will continue to evaluate these and other changes over time. I'll start with a summary of our financial performance. In the fourth quarter, we reported 9% revenue growth on a spot and currency neutral basis. For the full year, revenue grew 8% at spot and 9% on a currency neutral basis. Transaction margin dollars were flat year over year in the fourth quarter and declined 1% for the full year. Non-GAAP earnings per share were $1.48 in the quarter, representing 19% year-over-year growth. Higher earnings per share in the quarter were driven by ongoing expense discipline and better-than-expected transaction margin dollars, which benefited from branded checkout, Braintree, and interest on customer balances. We ended the full year with $5.10 of non-GAAP earnings per share, up 24%. Our full-year results benefited from lower operating expenses, the higher interest rate environment, and the impact of share buybacks. Now I'll walk you through some key operating metrics that support these results. We ended the year with 426 million active accounts and 224 million monthly active accounts. Throughout last year, we indicated that we expected ongoing churn of unengaged accounts in less developed markets, predominantly in Latin America and the Asia-Pacific region. This was the primary driver of our year-over-year reduction in total active accounts. We had modest growth in monthly active accounts, up 1% for both the quarter and the full year, and our active base of engaged accounts remains stable. More than 50% of our total active accounts were monthly actives over the course of 2023. Transactions per active account, which is a trailing 12-month number, was 58.7 in the fourth quarter, up 14%. If we exclude PSP processing, which is primarily Braintree from that figure, transactions per active account grew 7%. Part of this growth rate is driven by the churn of unengaged accounts that I just mentioned, but we were also encouraged by the higher activity levels we're seeing among our core base of accounts. Page 14 in our investor presentation includes additional information on our historical trends in monthly active accounts and transactions per active account, excluding PSP processing. On volume growth in the fourth quarter, we saw total payment volume, or TPV, of $409.8 billion, representing 15% growth at spot and 13% growth on a currency-neutral basis. This growth was driven primarily by Braintree, as well as branded checkout and Venmo. U.S. TPV grew 11%. International TPV grew 17% on a currency-neutral basis, primarily driven by strength in Europe and improvement in Asia. For the full year, TPV was $1.5 trillion, increasing 13% at spot and 12% on a currency-neutral basis. PayPal's fourth quarter global branded checkout volumes grew by approximately 5% on a currency-neutral basis, bringing full-year branded checkout volume growth to 6%. We have seen a solid start to the year with consistent global branded checkout growth through January. PSP processing volumes grew 29% in the quarter, driven by ongoing growth in Braintree. The team continues to make product and performance enhancements for merchants. We are also putting greater discipline into our go-to-market and renewal processes as we focus on overall profitable growth. With respect to revenue, as I noted earlier, revenue in the fourth quarter increased 9% on a spot and currency-neutral basis to $8 billion. Transaction revenue grew 9% on a spot basis to $7.3 billion, driven by Braintree and branded checkout. In the fourth quarter, U.S. revenue grew 8%. International revenue increased 10% at spot and 12% on a currency-neutral basis, accelerating from the third quarter. Similar to TPV, we saw ongoing strength in Europe and improvements in Asia. For the full year, U.S. revenue grew 9%, and international revenue increased 7% at spot and 9% on a currency-neutral basis. Other value-added services revenue in the quarter grew 9% on a spot basis to $743 million. For the full year, other value-added services revenue grew 26%, or by approximately $600 million. For both the quarter and the full year, this growth was driven almost entirely by increased interest income on customer stored balances. Transaction take rate declined 10 basis points to 1.78% in the fourth quarter. Approximately 7 bips of this decline was driven by two factors: lower gains from foreign currency hedges, which are recorded as international transaction revenue, and flat foreign exchange fees. In addition, mix shift with higher volumes from large merchants continued to have a slight impact on our branded checkout take rate. Transaction take rate for the full year was 1.76%, also down 10 basis points year over year. Transaction margin dollars were flat year over year in the fourth quarter, compared to a 3.5% decline in the third quarter. This approximate 4 percentage point improvement was driven by a combination of the absence of merchant contractual compensation in the prior year period and by branded checkout and Braintree. The growth of interest income on customer stored balances and growth of branded checkout were the largest contributors to transaction margin dollars in the fourth quarter. This growth was offset by the absence of hedge gains compared to the prior year period, as well as declines in other parts of the portfolio, including the impact of migrating and consolidating legacy PayPal payment services. Fourth quarter transaction expense as a rate of TPV came in at 97 basis points, 4 basis points higher than the same period last year. This increase was primarily driven by Braintree volume growth and was partially offset by a favorable geographic mix of PayPal volumes and rate benefits in Venmo. Full-year transaction expense as a rate of TPV was 94 basis points. Transaction loss as a rate of TPV was 7 basis points for the quarter, up 1 basis point from the fourth quarter last year, and 8 basis points for the full year. Credit losses were $119 million for the quarter, or 3 basis points as a rate of TPV, down 32% year over year, and 3 basis points as a rate of TPV for the full year. We have taken a prudent and active approach to managing our overall credit risk, tightening originations within our PayPal Business Loans portfolio, and externalizing our European Buy Now, Pay Later portfolio. In the fourth quarter, non-transaction related operating expenses declined 9% as we continue to actively manage our cost structure. For the full year, the same expenses declined 11%. Non-GAAP operating income grew 11% in the quarter to nearly $1.9 billion, and for the full year by 14% to $6.7 billion. Our non-GAAP operating margin increased 40 basis points to 23.3% in the quarter and increased 110 basis points to 22.4% for the full year due to better operating expense leverage in each period. PayPal generated $2.5 billion in free cash flow in the fourth quarter. This includes a $1.7 billion net benefit from the sale of our European Buy Now, Pay Later receivables to KKR, partly offset by the impact of new loans originated as held for sale. Adjusting for this impact, we generated nearly $800 million in adjusted free cash flow in the quarter and $4.6 billion for the full year. Higher than expected changes in working capital and cash taxes had a negative impact on fourth quarter free cash flow. In the quarter, we completed more than $600 million in share repurchases, bringing full-year share repurchases to approximately $5 billion. We ended the quarter with cash, cash equivalents, and investments of $17.3 billion and debt of $11.3 billion. Before turning to our first quarter and 2024 guidance, I have two updates to our guidance approach to share. First, for the time being, we intend to move away from providing annual revenue guidance and instead provide guidance for the upcoming quarter. Given the considerable changes underway at the company, we believe it is prudent to guide revenue one quarter ahead and provide updates as the year progresses. Second, the first quarter and 2024 guidance that we're providing today excludes the impact of stock-based compensation from our non-GAAP results. This is consistent with our historical approach. Beginning in the first quarter, we will include stock-based compensation expense in our non-GAAP results. We will update our reporting and guidance accordingly at that time. Stock-based compensation is an integral part of our cost structure and one that we believe we need to manage more directly and transparently. Including stock-based compensation expense in our non-GAAP earnings will introduce more accountability and discipline and will align our own performance measures to the way that many investors already evaluate our business. In terms of our outlook for the first quarter, we expect revenue to increase approximately 6.5% at spot and 7% on a currency-neutral basis. In addition, we expect non-GAAP earnings per share in the first quarter to grow at a mid-single-digit percentage. With respect to our full-year financial plan, as we have said previously, with all of the changes we are making, 2024 will be an execution year and one where positioning the business for long-term success will be critical. For the full year, we are planning for a relatively consistent macroeconomic environment with some level of interest rate declines as we move through the year. We also assume that overall consumer spending and activity levels will remain relatively consistent. We expect full year 2024 non-GAAP EPS to be roughly in line with prior year EPS of $5.10. Underpinning our outlook, we expect roughly flat transaction margin dollars. Alex discussed our innovation and product enhancements earlier. Many of these are already in pilot or launch, but will require execution throughout the year before we begin to see impact. Our guidance includes minimal impact from these initiatives. We expect a low single-digit increase in non-transaction operating expense. As Alex mentioned, we announced actions last week to reduce costs to drive continued efficiencies, while at the same time investing more in our product engineering and platform teams to drive growth. There are two factors to be mindful of that will impact our other value-added services revenue. First, while we are still seeing benefit from the higher interest rate environment, we expect that this tailwind will be much less significant in 2024. Second, we continue to take an active and prudent approach to managing our credit exposure. We are carrying lower credit receivables after tightening originations last year, and for our off-balance sheet originations, we are planning for ongoing normalization in loss rates, which will impact the revenue share that we earn. We expect free cash flow for 2024 to be approximately $5 billion. From a financial policy perspective, we remain committed to maintaining an investment-grade credit rating. Absent inorganic growth opportunities, we expect to continue allocating approximately 70-80% of our free cash flow to share buybacks. However, given our strong cash position as we enter the year, we are currently planning for at least $5 billion in share buybacks in 2024. That concludes my prepared remarks. I'll now hand it back over to the operator to begin Q&A.
Thank you. At this time, I would like to remind everyone, in order to ask a question, please press star, then the number 1 on your telephone keypad. We ask that you ask one question, then return to the queue if needed. We'll pause for just a moment to compile the Q&A roster. Your first question comes from the line of Tien-Tsin Huang of JP Morgan. Your line is open.
Thank you so much. Appreciate all the details here. I wanted to dig in on the outlook for transaction margin dollars to be flat. Can you just give us a little bit more, maybe high-level thoughts on the key drivers there and maybe some of the levers that are available to you to get the transaction margin dollar growth to accelerate beyond that in 2024. We get a lot of questions about it, obviously, so I'd love to hear the puts and takes that you would underline for us. Thanks.
Sure. Thank you, Tien-Tsin. First, let me start just with recognizing how much change there is that we've gone through. You heard it in my prepared remarks, but we essentially have a brand new executive leadership team. We've accelerated the pace of innovation. The first look experience you saw a couple of weeks ago really was innovation that could have taken months or years. That I'm very proud of the team accelerating and getting done in 60 days. And we are at a point now where even our mindset shift, this focus on profitable growth is something that's new for the organization, and we are grinding away every day. And so with that said, let me unpack the components of transaction margin growth. The way I think about it is there's three levers there. The first is really around the branded experience. This is a proven experience for us. It's one that we, in some of the innovations that we put out, both for merchants that improve their experience as well as consumers with a new app that allows them to get through the experience better. That is a significant lever for us, and one that, to be honest, we've under-invested in. And if I take just specifically the mobile experience for our consumers, has been underwhelming. And it's something that with the new innovations we just rolled out, I expect for us to be able to continue to see improvement there. The second is around the unbranded processing. This is an area that we have invested significantly in. With Fastlane now, we have really, I believe, one of the best products in the market for our merchants. We're seeing the highest conversion rates out there, and it's something that our merchants are looking for and looking to adopt. We also are looking to move into new areas for growth that have higher margin opportunities, such as international and small business. And it allows us to actually have different conversations with our customers and really price to value the product. And the third is really what I'd consider a bucket of value-added services. This is a combination of improving our flows with our consumers to ensure that we're attaching the products that we need to, whether it's buy now, pay later, or our cashback MasterCard. These are flows that we've not optimized, and we're underperforming when it comes to really attach. And then some of the new offerings that we rolled out. You saw our advanced offerings platform, as well as smart receipts. These are all ways that we can monetize and improve the connection between our merchants and consumers. So that's different ways that I think about the components.
Yeah, and Tien-Tsin, I'll jump in on the 24 specific puts and takes on transaction margin dollars. And first, you heard us both say earlier that on the initiatives that Alex has been talking about, we have included limited impact on that in our guidance. But if I pull back, really, we're viewing largely steady trends to what you saw last year, maybe in slightly different proportions. So branded checkout being a healthy contributor to growth, improvement in our PSP margin profile. We expect some benefit in our interest income on customer balances, but really that should be much smaller than what we saw last year. And we do expect some headwinds to our credit revenue, which, as I mentioned in the script on the call, with loss rate normalization happening to pre-pandemic levels and that trend starting to work, we'll just see lower rev share from our partnerships in that space. And then offsetting that, we really see also that some of our smaller product lines in the aggregate will be a drag on TM. This will be to a much lower extent than last year, but in areas where we do platform consolidation, there are times we deprecate products to really push customers to new platforms. Good example of that is PPCP. We do see some drop-off, and we've got a few other products that, as you know, we have not invested as heavily as perhaps we should have in the last couple of years. And as we work our way through that, there'll be some offset there.
Got it. No, that's helpful. Thank you both.
Your next question comes from the line of Jason Kupferberg with Bank of America. Your line is open.
Thanks, guys. Appreciate you taking the question. So I wanted to hone in on branded TPV growth a bit. I think it slowed by a point in the fourth quarter to 5%. Was hoping you could maybe take us through some of the monthly intra-quarter trends there, any market share observations you might have had from holiday season, and then just some general comments on what you're planning for on branded TPV growth in the first quarter and full year 24. Thank you.
Yeah, thanks, Jason. Let me set the context, and I'll see if Jamie wants to pile on. You know, our branded checkout performance was 6% for the year. It's been pretty consistent, and you know, for what we're looking going into next year, we're expecting it to be consistent as well. And as we've talked about, that doesn't include or includes minimal aspects of the new innovations that we put out there. Let me talk about just some of the levers when it comes to the new innovations or ways that I think about accelerating branded checkout, because this obviously is going to be a big focus for the organization. The first is we really have to improve the value proposition for our consumers. This is why you see us leaning into rewards, ensuring that we've got an improved experience that reduces latency, and really leaning in on mobile as well, so that our consumers have a better branded checkout experience. Second, you know, the acceleration of Fastlane when it comes to our merchants not only improves the unbranded opportunity, where we can see 70% of the customers that come through the Fastlane experience, but allows us to have a second engagement with our customers and bring them back into a branded experience at a later date and show them all the different reasons why they should be using PayPal or getting a reward back for a purchase that they made. So I think these, again, are just a couple of examples of innovations that we're leaning into now that allow us to really focus on that branded experience.
Thank you.
Your next question comes from the line of Darrin Peller with Wolfe Research. Your line is open.
Hey, thanks, Alex and Jamie. Guys, just to follow up a bit on some of this train of thought. I mean, I know you're mentioning you're not incorporating these new initiatives in your transaction profit growth thoughts for this year. But when we think about some of these, I mean, most of these, to your point, Alex, are going to be beneficial to gross profit growth. And so I guess we'd love to hear a little bit more around what you'd measure as how you would measure success, whether it's the PPCP initiatives or unbranded, as well as the branded checkout experience. What KPIs should we look for? And I guess a little bit more on timing. If not this year, when do you want investors to expect some traction in actual gross profit reacceleration?
Yeah. Well, thank you, Darrin. And look, let me be clear. We are not putting in the expectations into the guidance until we see execution. We just think it's prudent for us to put points on the board before we put it into the guidance. That said, the teams are grinding on this every single day. We are having conversations with our merchants and introducing them. As I mentioned on the call, the reaction has been quite encouraging from the innovations. There is demand in the market, and we are starting right now. And I will tell you, the conversations that we're having now that we're focused on both innovations that are driving demand as well as improvements for these merchants are different than we've had in the past. So I just want you to know we are working now on this, and we will update you as we start to see points on the board and adjust our guidance as needed. Secondly, back to your first question around how I think about this. Look, the thing I want you to take away from all of this innovation that we rolled out in First Look is this is really changing the way we engage with our customers and our merchants. We are now creating experiences across the entire customer lifecycle, not just at checkout. So we are driving not only a checkout improvement, the 50% improvement in latency, being able to improve Fastlane, but now we're starting to see a customer value proposition with CashPass, giving rewards back to our customers so that they have a reason to choose PayPal at every purchase. We're improving the onboarding and the reboarding as they come back into the app and start to now attach our MasterCard or debit experiences or buy now, pay later. We're improving the post-purchase experience where we now have smart receipts or package tracking so that we can improve the engagement between our merchants and our consumers, and we now have an ongoing active use engagement. And then we're leaning into demand generation and actually solving the biggest challenge that our merchants have, which is finding new customers. As we think about our advanced offers platform or creating shopper insights so that our merchants can start to engage and personalize their experience through our data and through the AI that we can lean through. So the way I think about it is we are looking at the entire end-to-end experience, and we'll measure a success through the metrics that you have. It's going to turn into what does transaction margin look like? What does active use look like from our ongoing users? So that's how we'll think about it.
Okay. Thanks, guys.
Your next question comes from the line of Michael Ng with Goldman Sachs. Your line is open.
Hey, good afternoon. Thank you for the question. I wanted to ask a question about PayPal's commitment to durable, high-quality, profitable growth. How does that impact the pricing strategy in Braintree? What unprofitable businesses and products will PayPal de-emphasize, and how does that tie into your 2024 non-transaction OpEx outlook of flat? Thank you very much.
Great. Thanks, Mike. Let me talk about Braintree, and then I'll have Jamie talk about potentially some of the other products and businesses. So let me take you back. Braintree, if you go back a few years ago, was really trying to establish itself in the market. It hadn't delivered at scale, and there were gaps in the product. We've invested heavily in the product and have really focused on some of the largest U.S. enterprise customers, which now have proven the scale while we've gotten the product to parity. Then you look at what we've just rolled out with innovations like Fastlane, and I think we've now leapfrogged the competition. So what does that allow us to do? It allows us to be the one-stop shop for merchants. It allows us to provide a best-in-class experience on auth rates and give them the ability to have not only the best processing in an unbranded, but also package that with PayPal and with all the other ways that customers want to pay, including buy now, pay later. We now are shifting towards being able to have a price to value conversation with our merchants and being able to really start to think about how will we ramp up go to market for not only Braintree, but also PPCP. We also are now moving into markets that have higher margins. So international and small business with both Braintree and PPCP allow us to now, again, price to value and have different conversations. So that is how we think about it. We're not focused on unprofitable growth when it comes to Braintree. We think we now have the product in market to be able to compete effectively and win.
Yeah, and Mike, on the other part of your question, I guess what I'd say is we are just doing too many things. And our biggest opportunity is that we have to make decisions to stop things and to really focus. And that gets into market competitiveness, it gets into pricing, it gets into really leaning into market opportunity and really stopping doing things that prevent us from doing the right thing in those spaces. So we are knee-deep in that right now. And so when we talk about a year of transformation and execution, that's exactly what we're talking about.
Great. Thanks, Alex. Thanks, Jamie.
Your next question comes from the line of Ramsey El-Assal with Barclays. Your line is open.
Hi, Chris and Jamie. Thanks so much for taking Alex and Jamie, thanks so much for taking my question this evening. I wanted to ask about how much leeway or opportunity you have to continue kind of taking out expenses while simultaneously executing on the growth strategy. How are you thinking about striking that balance, sort of cost control versus growth? And I guess, how confident are you that you have room to do both?
Yeah, I would say that is definitely an and, not an or. And that's exactly what we're doing with the workforce announcements we made a week ago and really taking that and putting that back into product, into engineering, and into marketing. We have got to invest deeply to grow this place. And it's really important for us to just set the company up for the future. And to do that, the innovation muscle, the commercial muscle, means that right-sizing our expense levels isn't going to be something that it's a one and done. We know we have significant opportunity to continue to be more efficient, be that through automation, be that through driving deeper productivity. And as we harvest that, that just gives us more levers to invest that are the right things for our profile as we go forward.
Got it. Okay, thank you.
Your next question comes from the line of James Faucette with Morgan Stanley. Your line is open.
Great, thank you so much. Jamie, just a quick clarification, and I have a question for Alex. But you said that starting from the first quarter, you'll be including stock-based compensation in your non-GAAP rather than excluding it. So does that mean that, you know, if we just imagine that we fast forward a few months, that the non-GAAP earnings would be reduced by roughly that $1.8 billion? Just looking for a little bit of clarification there. And then, Alex, you know, you made an interesting comment in terms of like feeling like things are too big organizationally, but I'm wondering how you're feeling about the tech stacks right now and the level of integration and where we're at from that perspective in terms of your ability to drive the kinds of improvements and perhaps add functionality to improve the customer experience. Thanks.
Yeah, James, on your first question, you have it exactly right. So beginning in the first quarter, we'll start including stock-based compensation expense in our non-GAAP. And closer to that time, we'll do the look back where we'll provide, you know, the retrospective data so that we've got everything on a comparable basis. But yeah, you're thinking about that right.
And then James, on your question around the tech stack, look, I'll be transparent. The company has gone through significant growth over the last few years and a lot of acquisitions. We have not invested enough in creating a single platform. That again slows us down when it comes to innovation, and it slows us down when it comes to being able to leverage the data across the ecosystem. We are investing heavily in that now and starting to see real improvement. I mentioned a couple of things on the call, but really being able to put out a reporting system that now sees across the entire ecosystem, being able to see a single view of the customer so that now we can provide innovations to customers, but also actually be able to cross-sell and be able to say, hey, this is a customer that has this risk profile and should be in these, you know, 2 or 3 different products is a huge win for us as we start to consolidate. It also just accelerates our engineering velocity. Being able to have a services-based engineering team that can build once and deploy across the entire ecosystem is the direction that we're heading in. And so you started to see that. Even the innovations that we just put out over the last couple of weeks weren't really possible without us being investing heavily in the platform. But I also would say we have a ways to go. And so it's a primary focus for me and the organization, and will drive velocity and efficiency.
Your next question comes from the line of David Togut with Evercore ISI. Your line is open.
Thank you. Good afternoon. A major regulatory change in payments just went through in Europe with Apple opening up its iOS and NFC chip for physical point-of-sale payments. What opportunity does this present to PayPal?
Yeah, thanks for the question, David. We are tracking this closely. Apple is a great partner of ours, and our customers that love PayPal on the online e-commerce side are demanding being able to have an omni-channel and offline solution as well. So we'll be working closely on this, and when it is available, we will be ready to be able to deliver for our customers, both online and offline.
Your next question comes from the line of Sanjay Sakhrani with KBW. Your line is open.
Thank you. Alex, one more on the initiatives and just trying to think through the prioritization of these additional investments you'll be making. You know, of those 6 initiatives, which do you think will sort of yield the returns quickest, and maybe a little bit more on timing of them, maybe not 2024, but how early? And then, Jamie, just a quick question on the interest rates. I think you mentioned you don't expect it to have a big impact or as big an impact in 2024, but is there an explicit rate forecast you have? Like, do you have lower rates in 2024? Thanks.
Thank you, Sanjay. So, all of the innovations are incredibly exciting for us, but let me be specific on your question. The 2 that I am closely watching and our teams are executing on immediately is really a focus on the branded experience. This is both for the combination of merchants and consumers, easing that experience for a customer to choose PayPal, have a reward that comes back to them, ensure that they're able to get through the experience with velocity and check out every time with PayPal is a huge focus for us. And that's where we are driving a new app experience. And again, all of these innovations will be coming out over the next couple of weeks to months. Then we have to drive adoption. So that is having conversations with merchants, ensuring that they're upgrading to our latest innovations. That's ensuring that we make it easy for them as well. So that's why you've seen us launch a new developer portal. We're creating no-code, low-code experiences so developers can take the demand that they've shown because they have a best-in-class experience now and get it into market. So step one is I'm very focused on that branded experience. The second one is around on the unbranded side, which is ensuring that Fastlane gets rolled out. That to me starts to create an interesting network effect of us being able to have not only a branded experience, but for then those consumers that pass a branded experience, whether it's ours or anyone else's, and want to just go through a guest checkout flow, we're able to identify them, we're able to help them and our merchants complete the transaction, and then we're able to have a follow-up conversation with that customer as well because they've gone through our Fastlane experience. So those two to me, we need to get rolled out. We need to get points on the board and show that it's driving, but driving outcomes. But that is where I'm most focused on right now.
Yeah, and Sanjay, on the interest rates question, we do expect that the interest income on customer balances will have some growth this year, but really it'll be more first half focused. The second half, we do expect a series of rate cuts that is assumed in our macroeconomic scenario that underpins our guide. And that's why the second half should be much lighter on that front.
Thank you.
That is all the time we have for questions. I will turn it to Alex Chriss for closing remarks.
Fantastic. Thank you, Sarah. And thank you all for joining us today. I want to reemphasize that 2024 is going to be a transition year focused on execution to position our business for long-term success. I'm excited with where we're positioned in the market, and I know that there is real opportunity to grow our role in commerce. We're driving the foundational and transformative changes that will set the company up for the future. Thank you.
Thank you. This concludes today's conference call. We thank you for joining. You may now disconnect your lines.
Hey, so hopefully, that's what you guys were looking for. It looks like the stock has gone down a little bit, and I will switch over to going over the chart unless you guys would like me to go over some of the supplemental information. Happy to do that. And sorry, I must say, if I was jumping around too much with the slides, I wish they would have had control over that, but I had to try to navigate it, and and so that has ended. And I will put the material from this call in the description of this video, and I will put timestamps on it as well, so we can so you guys can more easily navigate to the sections that you're interested in. And I'm just going to adjust, the screen here, so I have the chart back up there. And so let me see. I have to adjust this, so just give me a second. That is why it is small, because I made it small. Okay, so back in business with that. And yeah, we can just kind of look at the chart, see what we think about it. And yeah, I have to say, for me, I was initially happy that hit 6135, which is the 382 Fibonacci retracement. I'm actually going to plug myself in here so I can make sure that you guys can hear me all right. All right, cool. And then also it did dip to the 50% retracement at 59.23. I like I said at the beginning of the stream, I had a little order placed here, and wish I would have done it for the level lower. It does seem like we might be going to the 618 at $57.11, as price does really continue to go down about 7.5% in the after hours. And but I will look at and actually here, let me yes, this should be good. Okay, as far as audio goes, I'm not used to putting other things up here, like the webcast. So it's a learning experience for me. But hopefully that was enjoyable. But yeah, we can look at this chart. I might look at it on the daily time frame, as that is how I do most of my analysis. But then I'll also include some of these wicks from the after hours, so we can get a better idea of what's going on. And then I will do an update video on Saturday, so we can get a better idea of where this has gone following earnings. So right now, it looks like the price is at 58, right around $58. So that's coming down here. And so that does look like it's below not only the 382, not only the 50%, but it's going to be down here. And so that has gotten not only below this downtrend, but back into the wedge. And so hopefully that represents, a dip buying opportunity, and that we are able to reclaim the top of the wedge. But it's quite possible we might be going down to, let's see, price is at 58.45 right now, 7.5% roughly in the after hours. It's quite possible we'll be going back to fill this gap here at 54.72. It does look like I have an alert at $55 there. And so, coinciding with that gap fill is the 786 retracement at $54.09. And so that is from, this retracement from the run up from the lows just before the previous earnings, October 27th, to the high here of January 22nd. And we can look at, let's see, the high. Actually, we can do another retracement, or perhaps adjust this one to the, let's see, after hours high. We can look at that at 69.63. I do most of my analysis, or pretty much all of it, I should say most, on the daily time frame. So I don't know that adjusting this up to 69.63 would really add that much. These levels are, in reality just approximate, but maybe, I'll adjust it but then move it back. And so actually I'll just type in the number 69.63. 69.63. So we get that there. So these lines, as you can see, oops. Yeah, there we go. They don't really get adjusted too much, but I do think that 786 around that gap is intriguing. This just brings it a little bit closer to that level. But yeah, this does seem to me like it's going to be going down. It could have, done double digits down, so it could be worse. But yeah, we are now, back into this wedge. So hopefully this is just a temporary pullback, but if not, we could be seeing, coming down to this gap fill. And with this run up here, I might actually do another retracement from the low here to the high here. And actually, this might be a level to keep an eye out for. The low on January 17th was $56.47. Ideally, though, we do get caught by the 618 at $57.11. That does coincide with this red dashed line that I put up there based on the low over here. Let's see, that's at 57.29, so that was the low on August 18th. So something to keep in mind there. And so basically what I took away from the earnings call is that basically they've got to reposition themselves a little bit strategically for more growth in the years to come, not just 2024, but years to come. And they've got to strategically do that. They have their branded products, PayPal, or their branded product, and then unbranded, which I assume would be services that, maybe are kind of like a black box, closed door type of thing services provided to business that the consumer doesn't necessarily see. And yeah, so I feel like they're positioning themselves for future growth, so it's good in that sense. But there's not necessarily going to be a lot of growth as far as the stock price goes this year, as my impression. But yeah, I'm pretty new to earnings calls and stuff like that, and really paying attention to that stuff. And yeah, just I try to focus more on the chart. And so what the chart is telling me is that we quite possibly will be coming down to fill these gaps. And so good to see where this settles out, what levels it settles out at, given that it's below 59.23, this level here. I do think that we will be revisiting the 618 at $57.11, or right around $57, maybe $57.25 if it doesn't get all the way down there. Or yeah, $57.29, this red dashed line that you see there. So yeah, but this could also be, short term. We're going to have to see where it is, I guess, in the pre-market and into open tomorrow, where it closes the week. If we look at this on the weekly time frame, is there anything that stands out that we want to be looking at? Let's see. No, I mean yeah. Results could have been more exciting, but yeah, it is what it is. And price is down about 7% in the after hours, about $4.50, just under $59 at $58.75 about. And so I can switch over to the 10-minute chart again. And it just looks like it's going down and waiting to get to this level at at 57.11, that retracement. And let's see, beyond that would be, if 57.11 doesn't hold, the next level that I have highlighted at least is the gap fill at right around $55, and the 786 just below that at 54.09. And so let's see here. What's some news articles? PayPal guides for Q1 revenue growth after Q4 beat. So that was good. Again, like I'm new to following closely of earnings reports, so it's good that they did get a beat. PayPal expected to post. Yeah, okay, so that's old news. But yeah, I don't think I have too much to add to this. If you do have any requests or comments, you could put them in the live chat. I did get a request to go over Nano Dimension, a stock that I have covered. And so I will go over that in a minute. But if you are, new to the channel, if you did like this content, I do plan on doing more earnings calls. Please, make sure you like the stream, like the videos that you do enjoy, and always share your thoughts, whether that's in the comments or in the live chat. Happy to take them. And also make sure you subscribe. Trying to do live streams. I am doing live streams every Sunday and Thursday evening at 9 p.m. Eastern. Trying to get in at least one more live stream in there during the week. And also, I've been putting together, this calendar to kind of keep myself accountable and to be following up on stocks that are popular. PayPal I have been covering on Saturdays, so not only do I get the week or the daily candles in there, I also get the weekly, so I can do a little bit more of a, I think, robust analysis. And so I will be doing a follow-up this Saturday on the 10th, so look for that video. Also, as I take requests in the live streams, I try to take clips from those and put videos out on them. Those are highlighted as blue. Sarah is mentioning Rumble to $10 soon. I am putting a buy order at $7.80. Thanks. Actually, I'm telling everyone in my family about Rumble now. And so for me, I can pull up Rumble here. I have been seeing topping signals with Rumble. I will be covering it on Thursday, so that's tomorrow. So I'll give an update on that after the close. But yeah, I'll just go over signals that stand out to me in that. And what I'm seeing, is, basically like I think of it kind of like with Dogecoin when it was at 70 cents. Everybody was saying it's going to $1. When Bitcoin was at 69K, everybody was saying it's going to 100K. And those things didn't happen. I'm sure they will in the future. But right now, with Rumble, I feel that everybody's saying, it's going to 10. I got that green mark right there. And I think that we could be seeing some topping signals. But, some of those topping signals could be invalidated. Shorts are in trouble as far as what Bill's saying. It's crazy how much the cost to borrow has risen on Rumble. And so just what I see with the chart is I had seen here with the higher highs formed. This is on the daily chart. With higher highs, we saw lower highs in the RSI. That's bearish divergence. And then over here, we see the RSI currently at 73.45 with a higher high here. And from this lower high that we saw, we actually saw it at 72.42. So we are putting in a higher high with the RSI. So that bearish divergence that I had identified is now, has gone away because we put in a higher high with the price and the RSI is slightly higher. However, it's not a lot higher. We are seeing that it is in overbought territory above 70 with the RSI. And so for me, I don't have a position in Rumble, but if I were to establish one, you can see that I've got this alert here at $5. And I think I also have an alert for it going above 702, which was the high here. I'm waiting. I'm on the sidelines. I do think that there could be a pullback. And so that is when I would look to establish a position. I think, you can think about it with, my experience with, buying the top really comes, with crypto, Dogecoin and Bitcoin. And, you see a lot of tops around the holidays, around Thanksgiving, Christmas, people going home to talk to their families. And, you got to buy this. It's going to, whatever number. And then the top is in. And so I view, and I feel like this is an unpopular opinion, I feel that there's going to be a pullback with Rumble. And so I think that there could be a better time to buy. I'm just going to type up William because I can't see there's a stupid heart emoji that always blocks it. What is Rumble? So Rumble is, let's see, I can pull up their profile here. It is basically like kind of a competitor to YouTube in that, and that doesn't mean that I'm against it or anything. And I will probably, as this channel grows, I will probably look to expand it to Rumble because there does seem to be a lot of interest in it. And there has been some censorship and things like that on YouTube. And so Rumble has been kind of a platform to combat that, so that if I'm streaming and I get cut off or something, I might be looking to expand to, or move the channel to Rumble so I don't get censored. And I think that there is a lot of similarities or complementary interests between Rumble and like Truth Social, stuff like that, in that there's censorship on Twitter, and then Truth Social has started. There's censorship on YouTube, and Rumble has started. And you can actually see that Dave Portnoy, I don't know if you follow him, Barstool Sports, he is kind of, a degenerate gambler. And, so I think that there's some, he does post his, bets and his moves as far as doing Spirit Airlines, Save, ticker symbol Save, and other stuff like that. And so, yeah, I think that there's a lot of potential for Rumble. And there's been a lot of talk on social media about them getting their share price up to $10 a share, because then they can do a capital raise, I believe. And so to me, that kind of seems like it's a corporate pump and dump. They want to pump it up to $10 so then they can dilute. and that would then cause price to go down. So I feel like this is a pretty risky play. I don't think for me, it's, I don't doubt that it will go to $10, but I just don't want to buy it at 806 at the closing price today, and then have it pull back to 702. And so I will, I'm going to be covering it tomorrow and I'll be sharing my thoughts, but a lot of my thoughts really come from doing Fibonacci retracements and seeing levels that kind of stand out with them. And so if I do a retracement from the low here up to the high of today at $8.21, what stands out to me. And so a 236 retracement is going to be going back to 706, right around $7. And so I view, well, if it's going to $10, eight's cheap. You're going to be getting a 25% return on that. But I do think that there will be a pullback, and that $7 is a more appealing average than $8. And it's quite possible that it could return to these other levels, like the 382 at $6.35. There was this gap that was down here that I'd marked at $4.97. That did previously coincide with a retracement that I did going down to the 618, but that is now at $5.19. Hey, Nameless, what's up? Glad to see you here. I'll look at Baba and Snap in a second. I'm just going to finish with Rumble because I know there's a lot of interest in this one, but I will be doing, a follow-up video tomorrow. And so, yeah, I mean, I just think that there's going to be a pullback. I think I think it's in euphoric territory. It is overbought with the RSI. That doesn't mean it can't go higher. As we've seen it in the past, go up to here. Let's see. Actually, no. Yeah, I mean, yeah, we've seen it in the past go up to 87, almost 88 here. So I do think that, there is, a lot of potential for this to go up to 10, but for me, I don't want to be establishing a position in this with the risk of being rug pulled, because you have to think about it. It's gone up from the bottom here to the top here over 100%, 144%, almost 45, right around there. And so I view it as being risky at this point. And with a lot of people screaming, it's going to 10. That reminds me of Dogecoin going to $1, Bitcoin going to 100K. And this could very well be a top. However, I do also want to point out, though, that I was looking for a close above the high here, $7.02. And we got that a couple days ago on the 5th, on Monday. And we've since seen higher closes. And we keep putting in closes higher than the previous high. So that does show that there is a lot of strength. Volume doesn't seem to be too high, though. So I'm wondering if this could be topping soon. So I don't want to be making a video and saying it's going to 10 and then have people buy it at 8 and it pull back to 7. So I feel a little bit of responsibility around that. And so for me, not having a position in this, I'm reluctant and waiting for a pullback if I were to establish a position. I think that if, let's say, you bought it at $5 or $3, it might be a good time to trim a little bit of that. So if it does pull back, you can add those shares back at a discount. Or, if it does continue to go higher, you're at least securing those gains in case maybe, there is, not that I think Rumble is trying to rug pull anybody, but if there is an offering or something like that, price does drop, then you'd be able to add back in. So those are just my thoughts on that. And so, William, I do see your comment. I might download the app now. I support free speech. Yeah, definitely. Free speech is great. Somebody was commenting, do I plan on doing streams on Rumble? What I've found as far as growth of a channel and stuff like that is that, I need to really focus on YouTube. Once this gets to monetization, which I think will happen in February, but it might actually end up in March happening, which is actually kind of what I expect. I need to focus on that. And then once I get it to that level, then I could think about exploring Rumble. But I don't want to divert focus. Rumble is definitely something that I plan on exploring, but I don't want to kind of divert my focus just yet. Joe Rogan's plural, is saying, wait, that's, sorry. Sarah is saying that Joe Rogan's contract with Spotify allows him to join other platforms like Rumble to post content after a day. Yeah, and I don't watch Joe Rogan on Spotify or don't tune into him on Spotify, but I do watch his clips on YouTube. And I feel like there is a lot of opportunity. Really, I mean, if, YouTube is the king right now, you want to be looking for things that have growth potential. And so I think Rumble is definitely in that. And looking at the chart here, stepping back, there is, even just a $10, that's a 25% move. And so I'll do a more in-depth analysis, or maybe perhaps more concise based on what I went over with this retracement tomorrow in the video on that. But I don't want to spend too much on it because I do want to get over to Nano Dimension. That was requested, and I did get a couple requests from Nameless. And so I'm just going to type those in here so I don't forget them. So one is Snap. I'll put that in here. And then also Baba. And I'm just going to continue down with the comments here real quick because before I get out of Rumble, Samuel is saying they need to get about above $10 for 20 consecutive trading days to raise capital. They will push it above that, bro. Yeah. I don't doubt that, but I feel like, at least for me, I'm waiting for a pullback. But I'm not saying that $10 is not going to happen. But I will mention that in tomorrow's video about $10 for 20 consecutive days. So I mean, if you're holding this, and your average is down here, I feel like you've got pretty low risk of this gap being filled. But there is a gap here. There is a gap here. I think that, the sentiment, there does seem to be a lot of strength in this keep going up, getting higher closes. But I do feel like the volume is, it's elevated relative to how it's been in the past, actually by a good amount. Like relative to this peak, it's not that high, but it is higher than it has been for a while as it's been fading down. So yeah, I think that it's definitely going up, but there might be some better times to add, like $7 at this point might be a better time to add. Thank you, Sarah, for saying, well, before I get on to Sarah's comment, maybe you can just double download. So I'm not sure what you mean by double download, Samuel, but I do plan on starting to stream on Rumble because there does seem to be a lot of interest, but I just want to, I get spread thin. I'm spread thin between a job that I have and doing streams, doing videos. So I just want to make sure that I continue with the growth on YouTube. Once that growth really, I want to get the channel monetized so then I can kind of evaluate, is this a possibility for me to either quit my job and get a part-time job, or maybe I could eventually quit the job and just do this full-time. But I need to get to that monetization threshold first with YouTube. Otherwise, if I'm diverting energy to Rumble and exploring that, then it's, it might just be an hour of downloading Rumble. I could put out a video in that time. So I do expect to be exploring Rumble in March for sure, as far as this channel goes. Now, as far as the content goes, I guess it would be a somewhat different channel if it's on a different platform. Sarah, thank you for sharing the videos. Yeah, and I'll be doing Rumble tomorrow, and as long as every video that I put on basically this calendar, trying to organize stuff for myself, because I can't do every video every day, but as long as Rumble gets over 100 views tomorrow in that video, I'll do an update the following Thursday, and I'll just keep doing that as long as I can, and I will be going over any tickers that are requested in live streams. And on that note, I should get on to Nameless's request, but just Bill saying, watching Rumble now, thanks. Maybe I'll buy on a 750 pullback. Yeah, so I think, so a lot of times I do get comments when something runs up and people say, oh, I bought up there, and then they're commenting after it's pulled back. And that's the wrong way to go about the market. You want to be buying on dips or pullbacks. And so, yeah, I could see this pulling back to, really just based on this retracement, I could see this pulling back to $7. So 750 better than 8. And so, yeah, I think that's good. Am I on Rumble app at all? I am not, but I do plan on exploring Rumble in March. But yeah, I'm going to go over Baba now and then Snapped. There's just been so many comments on Rumble. Sorry, Nameless, for keeping you waiting. But yes, so Baba following earnings, I had thought they were getting this big pop, and also Gareth Soloway on the community page. I'll actually pull it up because people don't always. Let's see. This is. I'm just gonna make this a little bigger. The community tab. Not everybody goes to this, so I'm just gonna go to it. I did post this video from Gareth Soloway. I'm not sure of the timestamp for his coverage of Baba. It's probably right in the middle of it, but he pointed out in this video that there does seem to have been this. Let's see. How do I draw this? It might just be based on, let's see, maybe I could do it from the close here to, yeah, even he had a very little blip of it breaking out. And so maybe that seems reasonable to me, that trend line. So yeah, he had this blip, closing above, but you need to get confirmation. You need to see 2 closes whenever you see a breakout, because this is not an especially strong breakout. We have seen price outside of this trend line, just like how it originates. And so with that, we did see this pullback. And that is, I'm surprised. I haven't looked at this all day because I night shift and was sleeping during market hours. But yeah, pullback here to 73.64. I'm going to need to do a retracement on this from the low here to the high to see if there's a level that stands out. Maybe it's at support. And so at 66.63, right there, to 78.35 or 34. And also, I do want to note that, I think in the video that I put out, which was a clip from a stream, I wasn't really too sure of where this would go because, let's see, I had seen this, before earnings, that it was kind of in this wedge pattern and in this larger scale, kind of wedge. It seemed to be right in the middle of it, not just above support, not just below resistance. So it's hard to, really figure out where it would go. And so I, like with PayPal, I was on the sidelines. Now I'm in PayPal, but I don't have a big position and I'm not too worried about it. But yeah, it's risky with earnings. And so with this, it does look like closing below the 382 at 73.87. And so that doesn't look too good, but again, you need to see 2 closes above or below a level to get that confirmation. It's quite possible that it could be settling out at the 382, and that would kind of correspond with, this, rough trend line that I did during a stream. But, if we do see continuation downwards, it does look like it's down a little bit in the after hours, that we could see it going down to the 50% retracement at $72.48, right around $72.50. And so I feel like I'm leaning towards more it going to that level, or perhaps even the 618, which is at a price of $71.10. Also does seem to kind of correspond with this uptrend that I have drawn there, kind of rough. And that would also correspond with a full retracement if we're doing one from here to the top here. And so that would be, like I did lock that, so I'm going to unlock it just so I can move it. And so that would be, a full retracement there. And with that being said, it does look like the 786 is right around 72.50. And so that is, similar to this one being at 72.50 here, the 50% retracement. So I could see it continuing down, maybe settling at 72.50 or 71, right around there, if we do get another close below the 382 at a price of $73.87. So something to keep in mind there. And then I see that there are more comments. I'm just going to go over Snap, so I'm not leaving these comments unattended to. But yeah, almost 35% drop on the day. Where could I see this going? This I did already did this retracement from the high there to the low here, so completely valid still. And I probably will be putting a clip out on this because I haven't covered Snap in a while. I don't even know if I ever have. And yeah, so from this retracement, what we can see is that price opened just above the 618 at, let's see, that level is at $11.94. Price opened up today at $12.03, so just above that, right around $12, psychological level. And we did close, though, at $11.41. I think that is probably going to be coming down to the 786 at a price of $10.32. But let's see, are there other things that stand out? Look at this volume profile. We've had a lot of consolidation at that level. And so I do think that it will be finding support around $10.32. Possible it doesn't make it to that level because this volume shelf does look like it picks up right around $10.78, $10.75. So I do think that this is going to be continuing lower. And so I would keep a lookout for sub 11, 1075, and really $10.32. And what I have been doing based on these Fibonacci retracements that I do is if there is a position either I want to establish or dollar cost average into, add to, or trim, it helps me to remove emotions. I just set orders at Fibonacci levels or alerts at them. And so what I might do, which I can do here, is I might create an alert at, let's see, I don't know why I have one all the way at 8, but I will change that to $10.75. And so that will alert me. I'm going to delete this one because, yeah, I guess that's been bothering me. I will, get an alert if it goes to $10.75, and then I could assess, do I want to place a buy order? For me, the way that I roll is, I just establish small positions like one share at $10.32, and just to get, really get practice in exercising the discipline of, okay, did it settle there? Is it showing signs that it might reverse? Okay, then maybe I sell that position at the 618 retracement, or, do a retracement to the bottom here. Like I can do that here. And, maybe price does come down to that level. And then, yeah, trimming at around $12 or selling that share, whatever, might be a good strategy. And so I do that pretty small just because I cover a lot of stuff. I can't be involved in everything, but I'm just kind of experimenting to see how trading these Fibonacci levels works. But yeah, I do see the volume shelf there from this consolidation over here. And let's see, what's this level, this low here? I don't think we're going there. But we do see this little blip here. What does that also correspond with? Really, it's just like the volume shelf. But yeah, we do see this pivot high there. And so I could put a line there. It does also look like there's that gap, which I will draw in a second. So this is at high of $10.60. So I'm just going to make that right on the dollar. And I'll make it yellow. That is, a level that does seem to correspond with that Fibonacci level. We do have this gap here. It looks like that was filled now, so we can check that off the list. And then also we do have this wick up to that yellow line approximately at that Fibonacci level. So yeah, I feel like getting, below 1075 to 1032, maybe $10, that might be where Snap finds a bottom. So I have to look at that. And then, if you want to go long term, that might be a good level to go long term, or if you want to swing. And so really what I'm trying to do is I'm just trying to get better at swing trading on this channel. And so that's why I try to identify these levels. It's like you don't want to marry the stock, you want to marry the wins, you want to marry the gains. And so if you get really attached to something, you can't take advantage of those gains. So that's kind of my philosophy there, the philosophy I'm working on. And so I see a comment from Chris. Are you on the Rumble app at all? I am not, but I do plan on starting that in March once the YouTube channel gets monetized. I don't want to divert focus from one platform to another or dilute that focus. I want to make sure that YouTube is successful. And then once that's successful, I can leverage that success and move it on to Rumble. If Rumble is more successful, or if they're both successful, then that's a great thing for me and the channel and making the content more accessible. I see Ron saying, hey, Ed, can you do analysis on VKTX? Yes, I will throw that up. VKTX. And then I will try to catch up with the comments, but I can't be streaming forever. I've been doing this for an hour and 50 minutes now. But yeah, VKTX looks like it's up about 4.9%, almost 5% in the after hours. Do they have earnings today? It looks like they had earnings today, so that's a pretty hot one. And let's see. Does look like, just from a quick glance, looks like it's double top. But going up in the after hours to 25.68. This could be a type of scenario like what we saw with Baba. And sorry, excuse the lines here. I'm going to remove them for a second. They had earnings, today as well. And we did see this pop. Did look like a little bit of a breakout, but then a pullback. And so what I could see with this is that, if it opens up, 25.68 current price in the after hours, that is, lower than this high over here. That's creating, I guess this is a triple top. But if I switch this over to the weekly, maybe I could switch it over to the monthly, make it a double top. Yeah, this, I guess that bridged between May and June. So yeah, I think that this could be forming a double top, or, just topping, because it needs to get above this level with strength. And do we have any previous high? Now, this is all-time highs, so we want to see it moving forward with strength. And so if we look at this in the 4 hour, just to take a quick second, the high is 25.78. What was the high back here? 25.72. So it's a little bit higher than that. But yeah, I could see this being a, I could see this topping. I did just put out a video on something showing topping signals, double top. That was, here, I'm just going to check it on my phone here. What video was that? Let's see, showing a double top. Oh, that was plug power. So that might be a good comparison. We'll see what's going on with plug. I didn't see what happened with plug today. But where's plug at? Plug is red on the day, down 6%. Did get a double top form there. So, I do think it's possible that this does get back up to $5, but that might, the strength, the volume is dying down with this. So with VKTX, this is Viking Therapeutics, is that right? Let's see, yeah, Viking Therapeutics. This could be a sell the top, sell the news, sell the results type of scenario. Maybe we could look at the, let's see, the, here. As of right now, we might be putting in a higher high. If it does open, 25.70 in the after hours. We do get it opening higher, the RSI from these highs. Let's see, do we have here? We have, I don't see any bearish, let's see. Here, yes, this is bearish divergence, what we have right here. We see higher highs going in, and also we've got this really nice channel too. That's pretty cool. We can see from this day to here, we got this nice channel going there, putting in higher highs, so seems nice. But with this, we have higher highs in the price, but with the RSI, we have lower highs. So I'll just draw a trend line on that so we can see it a little clearer. with that, this is bearish divergence. And so I would think that this is a really good time if you have a position and you're up. I don't have a position. If I had a position, I should phrase it like that, I suppose, I would trim at least and or take profits because this is a double top. It's not up hugely compared to, it's not up relative to the high over here. So this to me is a double top, or I guess you could say triple top signal, bearish divergence. If we look at the Fibonacci retracement from the low here at 828, get that lined up just right, to the high of 25.24. Right there, okay. I could see this pulling back to the 236 at a price of 21.24, or perhaps more realistically, I could definitely see the 232, or sorry, the 382 at a price of $18.76. See this volume shelf there because we have this consolidation over here. That consolidation a little bit more robust than the consolidation we see over here. With this little volume lip, we got a nice shelf here. So I think that returning to $18.76 or $19 seems feasible. Coming down to the 50% retracement, I don't see much consolidation there. We don't have much of a volume profile there, and we do have this gap to the downside. Let's see, that is at a price of the high of the day, 13.10. And so that right there is a level that price might be going to. I like to make my gaps blue. And so coming down to the 618, maybe a wick down to 13.10, but coming down to the 618 would be at a price of $14.76, right around $15. So yeah, I don't have a position in this. I'm not shorting it, buying puts, anything like that. But if I did have a position, I'd be taking profits. And yeah, so we'll have to see what happens tomorrow. But I'll try to put out a clip of this. So more people are aware of it. Thanks for the suggestion. It's an interesting chart. But yeah, I think that the top is in with this bearish divergence. You just got to stack up these signs. Bearish divergence here, double or triple top here, not getting much strength going into that. Let's look at the volume here. Volume has been going down as the price goes higher. So that makes me think that there's less buying pressure at these levels. And so eventually it's going to get exhausted and collapse. People are going to take profits at this double top signal with bearish divergence and seeing this gap to the downside at 13.10. I don't necessarily know that that's going to be filled, but I could definitely see the 618, which I believe is statistically significant as far as retracements go. They tend to come back to the 618, whether that's to the upside or the downside. And so that here is at a price of $14.76. I'd say, what I'm going to do, I will put an alert at $15. I think that it's going to be coming down to there at some point. Might be a couple months from now. But I'm going to put an alert there. Maybe I change the alert by the time that happens. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching. And so that is just, I'll do a clip of that. And so I want to have that on there. And so let's see, coming back to the comments, Ron is saying, oh, yep, I did that. So hopefully that was helpful, Ron. Samuel, you might get hate if you're bearish on Rumble, LOL. Be careful, brother. I'll still support you. Yeah, for me, it's not about getting likes or anything like that. It's just about me trying to improve my skills looking at charts technically. And if I had bought Rumble at $3 or $3.30, whatever it was, I would, be trimming at these prices, but holding some of that position for $10, just lowering the risk. Samuel is saying, Viking Therapeutics, good long hold. I think that the top is in with it, but I could be wrong. And, for me, I don't have a position in them, so I'm not looking to add more because this is potentially a top. If I did have a position, I'd be trimming or selling. yeah, but that's just, for me, my risk management. Um, and if there is hate that comes for my views on whether it's VKTX or Rumble, then hopefully that gets more traction and momentum with the channel. Likes and hates, all good for the channel. And if I'm wrong, I'll follow up on it and I'll try to figure out why I was wrong, so that will improve my analysis for future tops or continuations, whatnot. Let's see. More people will join Rumble, more of a growth play. I agree with that. I feel like YouTube, I think that there's still a lot of growth with YouTube, but I feel like with censorship, with kind of, getting away from the mainstream media, I think a platform like Rumble has a lot of potential. And so I'd like to get on board with that before it gets too big. And, but I just want to make sure that YouTube is successful first, because if I spread myself too thin, then this won't be successful. And so, yeah, long-term hold, dollar cost average, a little a week, don't YOLO. As far as Rumble goes, yeah, I mean, I think that's kind of, I've bought the tops of things and had to pay the price of that. And so I just wouldn't want to suggest YOLOing into something like this is a good idea right now. If it does go from 8 to 10 without pulling back to 7, that's great for those who are holding. But for me, and yeah, I feel like it's a little risky having started at $3.33. It's up more than 100%. So I think you want to wait for pullbacks to either add or, trim on the up days. But yeah, I mean, it just looks strong, putting in higher highs, higher closes. So yeah, my bearish case for it is dissipating. And that's, I have to be learning from this. And if I'm not learning from the charts, and if I'm just following public sentiment, then it's, there's nothing there. And I, want to be improving my skills as a technical analyst and my trades based on those levels. So that's what I'm doing with Rumble. I am not on Truth Social. I'm on X or Twitter, but I am not really too active on it. So I don't plan on getting on Truth Social. If Twitter does really take off and I feel like that's benefiting the channel here, then I might explore Truth Social. But I, just, want to focus on YouTube. I do post a lot of stuff. I went over this on the community tab of the channel. And so you could see here, I post links to other videos. If some of you are on Lucid, Max Payne still for the week is $3. So I've been trimming as it goes up. And yeah, so I post stuff there. I try to, put my energy on the channel here. And so not trying to spread myself too thin on other social media platforms. But yeah, I'll type my handle, my Twitter handle here, DGenAN. My name is actually Andy, but happy to be called Ed. DGen Ed was taken on Twitter, and also DGen Andy, so I'm DGen An there. And let's just gander at HOLO. Sure, NASCAR all out. I will do that, and I will need to. So I've been doing this for over 2 hours now. I'm gonna need to close this down in a second. But yeah, I'll try to catch up. It's nice to have the engagement, so I can't turn you guys away early. Damn. Yeah, so this to me is, when you want to avoid like getting rug pulled, up. Damn. Wow. This is insane. Yeah. If you bought at 150, I'd take profits. What is this though? What is this? Is a holographic digitalization technology service provided in China. Let's see. Does look like, there's a this low here that's around $20. After hours, damn, after hours 100%. So this is crazy. This is for entertainment purposes only, let's see. 34. Let's see, what's this high over here? Yeah, so I feel like that is, basically where price is at right now, a little bit higher. Let's see, volume profile. It's just traded down so much. So yeah, I mean, this squeezing, I don't know where it's going. But if you're, up hundreds of percent, if you're up 1,000%, or yeah, I'd trim, like really. And I think a good strategy is if you get up, 100%, trim half your position so you can't lose any money, and then hold for, if it goes back to 113, then you still got a nice position, but you've eliminated all risk. It hit 51 after hours. Cool. I'll switch over to the 4-hour chart. Yeah, that's crazy. Thanks for pointing that out. I'll put a horizontal line at 51 and see where that lines up with the dailies. Look at that. That's pretty cool. We got this wick down here to a price of 51.50, so almost at that line. Yeah, I mean, if I was holding this, I'd and I guess this is because of a reverse split, 1 to 10. Pretty cool to see that move following that. But yeah, I'd be. Oh, and this is LiDAR as well. That's cool. So this is technology services include holographic light detection and ranging. So I know about LiDAR from like Luminar Technologies, ticker symbol LAZR. So it's with auto stuff. This doesn't seem to be auto, or yeah, this is advanced driver assistance systems. But yeah, this seems at this point pretty risky if you're holding it. If you're up more than 100%, I should phrase it, if I was up 100%, more than 100%, I'd trim half my position and then just hold the rest and see where it settles. Yeah, because then either way you're making money and you're holding company. If you believe in it long term, then that's great. And so, yeah, 2,000% today. That's crazy. 1,000% during market hours and then up. Yeah, so let's see. I'll switch this over to the 4-hour. So if you would have bought down at the bottom here and then held to the top, that's up over 3,000% to that high, to where it's at now. Yeah, 2,000%. So pretty remarkable. Congrats if you're holding that. Nameless, thanks for the defense. Let's see. Yeah, Ron, no problem. Are you making so many videos? You are making so many videos. Marty's saying, great work, man. The algo will kick in soon, but make sure you are taking tests soon. Don't let this wear you out. Yeah, so I'm not letting it wear me out too much. My job wears me out. And yeah, so this week I'm going to do another live stream tomorrow evening. And I will probably just do AMC and Palantir on Friday with no stream, do my weekend videos. And next week I'll see when I can do a third stream next week. But yeah, it's, breaks, rests. Yeah. Yeah. So, I mean, this channel is, like my social life is kind of on this channel and stuff right now. And so I'm indulging in that. I'm loving it. And yeah, so I think the amount of output I put out next week will probably be less because like this week I'm working the night shift. There's not as much to do. And so I'm able to edit stuff. With this stream, I'll probably be able to put out a couple clips from it, but not that much. And I do need to go over NNDM at the close of this because that was requested. HOLO, I see NASCAR, it says HOLO hit 51 after hours. It closed at 18. Yeah, so that's just crazy. The whole HOLO. And then Nameless is saying Andy is an expert, knows how to pump and then dump, does the stocks like he does the females. I wish. Yeah, so for me, it's just like whether it's, I'm not trying to do pump and dump, but just trying to identify levels of support, levels of resistance, and trim at those. So I'm not dumping. Like I feel like an example for that is Lucid, which I did point out that the max pain for the week is $3. And so with this, what I've been doing is I, got an average down here somewhere. I think at actually around 285, I think. And I've been trimming at these levels on the way up. I still have a position in it. I think it's going to $4, but I think with max pain and stuff and it kind of dying out right now, I think it's going to be pulling back to either 318 or most likely 303 or lower. And so I'm trying to, trim profits as it goes up, and then as it settles back down, buy back those shares lower so I can continue to be in the play. And also with earnings coming up on the 21st, this is one, if it's in the after hours, I might be able to stream it. And yeah, I think that you never can time the top or the bottom perfectly. And so I try to average in and average out. And so NASCAR is also saying a HOLO Chinese former D-SPAC, other Chinese stocks in play, though, the remainder of the week. Yeah, and so on the note of Chinese stocks, I'm curious about NIO. I have a position in this and do cover it on the channel. And so, yeah, it did go up to $6. Looks like it got rejected. That's why you need to see confirmation above those levels. This could seem like this pullback, is going to continue higher tomorrow. That's my hope at least. But it did. It looks like it actually closed in the, if I can just do a quick little thing here. It looks like it closed right around just above the 50% mark of that previous candle. So hopefully that's a good thing, but this does look like, I believe, an inside bar that does, I think, suggest some indecision there. But thanks, Matt. Thumbs up and good stuff. And so I did get a request for NNDM. I'm gonna close with this, and so basically I got a comment on Nano Dimension's technology, Nano Dimension. I did get a request for Nano Dimension, ticker symbol NNDM, to follow up on it because apparently there were a number of calls, a large order placed for a strike of $2.50 and higher closing next week. And so that makes me think, is this in squeeze territory? Has the season of squeezing started for Nano Dimension? And so what I see with the chart is it does look like potential double top here at 250. And so I think that there is some concern with that. But let's look at, is there any divergence, stuff like that. Look at some fib levels to see maybe this could be going up to $3 next week. And I think it's also probably good to check out the max pain to see about that. So what we see here is lower high put in here. And then with the RSI, we see a higher high. So that is bearish divergence right there. So good to be cautious of that. More people lose money in options than they make money, and that's why they're a thing, because the market makers make money from them. And so what we can see, it does look like there is, let's see if there's something here, just approximate levels here, connecting that. Does look like there's a breakout from this. If we connect this over here, maybe this is good. Does look like there's a breakout from that. And so this could be, like a falling wedge type of scenario. And let's see, I could probably do another one from over here to maybe to the open of that day, right around there. It does look like that was tested. And so this could be, and maybe this is ugly, and maybe I could, maybe actually a better way to do that trend line might be from the highs here. And no, I'm not sure. But yeah, maybe this is, whether it's in a falling wedge or this is just a trend line that it got a test of. But this, is a pretty clear breakout. And even we do see that it retested that. And so this could be perhaps this rejection from $2.50 closing below it on the day at $2.49. Perhaps that is just like a psychological mind game of, it's showing weakness. It couldn't close above 50 cents, but seeing this breakout and retest, we got a close here. It looks like on the top of that wedge, or top of that downtrend, and then continuation higher. Let's see, we could not get a close. Let's see, what was the high on this day? January 31st, the high was $2.49. Did get a close at that level, but really it'd be nice to see a close above that. But, that could be, a sign that this is going to break out. But, I do want to point out that I had mentioned we do see the higher highs in the RSI, whereas lower highs in the price. That as price, seeing what happens over the next couple of days, that could be broken, and then we start to see this go up. So I would say that bearish divergence is probably not too significant of a single signal, because if price goes up above, really, yeah, I mean, if price goes above the high here of $2.57.8, so $2.60, if we see a price go above that, that then breaks this bearish divergence signal, and then we could be seeing price potentially going up to $3, who knows. And one thing that we could do is a retracement from the top here. This is just approximate, not getting levels exactly right here, but just looking at that, does look like the 236 was support right around $2.37, but we do have this key level of $2.50, just being kind of psychological. But where could this go? The 618 is at $2.86, so quite possible it could be going up to those levels. But as far as like a squeeze going up to close next week above 250, stuff like that, let's look over at Max Pain to get an idea of where price might be going for NNDM. This is a website that I use all the time to look up Max Pain. And, what's that? Let's see. If this is for next week, we can see that Max Pain is 250. So that's what price is right now. And so, if bears have control, this is going down. If bulls have control, it's going up. And so, for me personally, I don't have a position in this. I have been covering it. The videos aren't necessarily that popular. So if you do like NNDM and you want to see more videos on it, make sure you like the video, share your thoughts in the comments down below. Also, share the videos with your friends, others who might be interested in Nano Dimension, and subscribe to the channel for more videos like this. Thank you so much for watching, and I think that's actually going to conclude the stream, which has been going on for now 2 hours and 16 minutes. I've got to get on with my evening, going to work in about 4 hours, and yeah, I want to put out some videos. And so for tonight, what I will be doing is, I want to look at my calendar. For tonight, I'm going to put out a Tilray video, and then probably we'll cap it at that, and then I'll try to get NNDM clip out as well, and maybe some of the other ones. Yeah, take care, Nameless. Thanks for joining. Yeah, so I'll see you guys tomorrow if you want to join for the live stream at 9 p.m. Eastern. Ticker request live, that's all I'll be doing during it. And I will be putting out, before that stream, I should have a Rocket Lab and a Rumble video out for that day, because they did hit more than 100 views last week, whereas Nano Dimensions and Peloton did not, unfortunately. But, that's how I'm trying to cycle this out and keep my, schedule in order so I don't get spread too thin. And eventually, I'll be able to be more ambitious with the schedule if I'm able to lighten my workload. But right now, I've unfortunately got to have a job. But hopefully by the end of February, beginning of March, channel gets monetized and I can see, what the future holds. Maybe I can work less and do YouTube more. So we'll have to see. But yeah, thanks a lot for joining. I'll put out some videos this evening, and I will stream again tomorrow night. I'll post that link either tonight or tomorrow. So look out for that. 9 p.m. Eastern tomorrow. Yeah, thank you so much for joining, and I'll see you guys later.